Good morning once again on the business desk. At this hour, local inflation data will take center stage when Stats SA releases the latest consumer price inflation figures. Economists are still expecting inflation to remain high and above the Reserve Bank's 3 to 6% target range, but CPI is set to continue dropping marginally as it has in the recent past few months, and that's after reaching record highs last year. Economist at FNB Koketso Mano speaks to us now about what's expected this time around. A good morning to you, Koketso. What's consensus here? Because we saw with the likes of the US a marginal drop in their CPI. What is meant to come out of Stats SA as a forecast?
Yeah, good morning to everyone listening. So yeah, we are expecting another drop in CPI. So you'd have remembered it dropped to 7.2% in December. We now expect it to drop further to 6.8% with today's numbers. So we'll see how that goes. This is mostly expected to be driven by the fall in fuel prices. As you would remember, in January we did have that over 2 rands per litre fuel price cut. So that's meant to drive the deceleration in inflation numbers today. We're also expecting to see a slowing in food and non-alcoholic beverages inflation, but that is more moderate. We expect that those numbers, especially for food and non-alcoholic beverages inflation, to remain quite elevated.
Moderate in a deceleration where CPI is concerned, but is it making a difference irrespective of how small these drops have been over the past few months?
Yeah, I mean, if you think about it in terms of the rate at which prices are growing or increasing, that rate is starting to fall. I think anybody in the country would rather have, a falling, a lower number of inflation. Or a lower number for inflation rather than that 7.8% peak that we had in July of 2022. So this falling inflation does mean that the rate at which prices that the consumer has to pay, or the basket for which the consumer spends, is starting to be slower. So that's a good development.
Now, an expected drop in CPI to 6.8% would still mean that it's above the 3 to 6% target range that the Reserve Bank has set. What decision could be expected from them next, as they've indicated that they are easing from the aggressive stance of monetary policy tightening, but it's not over yet?
True. So I think, just to put it in perspective, the numbers that we're seeing locally, as you've rightfully mentioned at the start, mirror what we're seeing internationally. You would remember from the IMF's latest forecast, they also see a slowing of inflation from 8.8% last year to 6.6% this year. But really, inflation remains above pre-pandemic levels, and that's what we're expecting to see in South Africa as well. From the FNB side, we see inflation averaging 5.8% this year, so that's quite strongly above where the South African Reserve Bank would prefer to have it, which is at 4.5%. So in line with that, as well as, inflation expectations from the BER indicating that, these inflation expectations also are above the 4.5% mark, we think that the South African Reserve Bank will likely hike by another 25 basis points in March. We'll see whether that happens or whether that 25 basis points that we had in January was the last one. But we think that we're really getting closer to that peak in interest rates. We think that, that will be the last hike that we see coming through in March. But given the fact that inflation remains above target, we're likely to see interest rates remaining higher for longer, which is the global theme.
Higher for longer may mean 2023, but at the same time, when you give a projection of continued decreases in inflation, are we likely to, at least in the next year of 2024, see a normalization of an economy that would be kinder to the pocket of the consumer given inflation and interest rates?
Sure. Yeah. So by the middle to end of 2024, inflation should be sustainably moving more towards that 4.5% mark. In the second half of this year, we could actually see inflation moving lower around that 4.5% mark, but it would be temporary. So when the central bank says we need to see it sustainably move towards our anchor, that's what they're talking about, and that only happens in the second half of 2024. So given their own forecast. So with that in mind, we can only expect to see those interest rate drops and some accommodation for the consumer coming through in that year. But that's something that we can look forward to, definitely.
We'll wait and see what that print comes out as at 10 o'clock this morning. Koketso Mano, Economist at FNB, talking to us about what's expected from the consumer price inflation figures expected from Stats SA later today.